Hello and welcome to the latest episode of Damien's Midweek Markets, the show where I talk about what's been going on in investment markets and what to look out for in the days and weeks ahead. Now, there's a nice coincidence that today is St. Patrick's Day, and the reason for the nice coincidence is because if you remember their famous advert where there were the guys on the beach waiting to surf and it had a poem being read over the top about them waiting, where tick follows tock, follows tick, follows tock. That is essentially what markets are doing this week, but with central banks. Now, central banks are taking center stage this week, and that's because we've got the US Federal Reserve having a meeting today, and we should hear the outcome of that later on today. So in UK time, that will likely be this evening. We've also got the Bank of Japan having similar meetings this week, so we should hear something from them. And of course, we've got the Central Bank of England. So the Bank of England are having a rate setting meeting this week as well. So the next few days are going to be crucial in markets. Now, you can't underplay perhaps how important the US Federal Reserve meeting is and what comes out of that, because at the moment we are still very much in this reflation trade. So I'm not going to go on about the winners and losers that we've seen, because that is still the case. Technology stocks suffering, cyclicals doing well versus growth, value doing well versus growth. That is still the case, and we're still seeing bond yields rising, particularly if you look at the US 10-year Treasury yield. That's up to around about 1.6%. The 10-year UK gilt yield is up around about 0.82%. So we've still got the same winners and losers as we've got this sell-off in bonds. I mean, if you look at China equities, for example, they're still doing relatively poorly versus other markets, although there's been a little bit of a mini rebound. And why this week is so important is because even if the Federal Reserve doesn't do anything with its monetary policy, the market is looking towards the rhetoric in particular. So are they going to be dovish or are they going to be hawkish? Because if yields keep rising on treasuries, for example, that will have a potential negative impact on economic growth. Now, we saw in Europe that the European Central Bank last week took action. They effectively sped up their rate of QE, their bond buying program, which the market obviously liked, because that would potentially put a lid on the yield of bonds in the Eurozone. Well, the market is kind of hoping, particularly if you hold growth stocks, the things that have been doing badly, they're hoping that potentially the US will follow a similar path and maybe start to loosen monetary policy, or at least say they're not going to tighten it. Because if inflation expectations become so ingrained in the market, as they are increasingly becoming, then we could see this rotation that we're seeing and the reflation trade start to become much more entrenched. And in theory, you could get the yield on bonds escalate. Now, the US Federal Reserve has already said that or hinted at that they're more concerned with full employment than yields themselves on treasuries. But there comes a point where they may have to act. If those yields do rise very quickly and they continue to do so, then if that starts to threaten that recovery in America, then the US Federal Reserve might have to step in. The market is waiting to see what happens, and it's important for the next week or next few days in particular, but then following on from that, what will happen following this meeting? Now, in the next few days, and particularly later on today into tomorrow, keep an eye on that stock app that I talk about on your phone. So keep an eye on what markets are doing. Depending on what the US Federal Reserve says or does, you will see a likely impact on markets. So if you look at your app later on today and you see the NASDAQ 100 has absolutely tumbled, you will know that that means that the Federal Reserve has been more hawkish than people perhaps thought. They certainly haven't made noises to suggest that they're going to do anything and intervene in bond markets as yet. That will obviously have a negative impact on assets like gold. It'll have a negative impact on things like emerging market equities, which we've seen, and emerging market assets. And going forward, it feels like this particular meeting is a bit of a crunch time for emerging markets, because if the US Federal Reserve is more hawkish, if it seems like there's a potential for them to raise rates sooner than they would have otherwise projected into the future, then that's obviously going to be very positive for the dollar. So have a look at what the dollar index does later today in the next few days as well. If that starts to rise and the dollar starts to strengthen, as you know from these podcasts and shows, that is negative for emerging market assets. So we do feel like we've come into a bit of a crunch time, that this particular meeting is very important for a lot of people's portfolios. So it could be that reflation trade that we've seen starts to take a bit of a breather. It could potentially reverse slightly, or if, as some people are expecting, that the Federal Reserve will take a bit of a hands-off approach for now, then you could potentially see it accelerate, which will mean cyclicals doing well. A lot of the stuff that we've been seeing doing very well in the last few weeks or month could continue to do so, and it could have a big impact on people's portfolios. But all we can do now is wait. And as I say, in the next few days and weeks, keep an eye on bond yields, the US 10-year Treasury yield, the 10-year UK gilt yield. Keep an eye on things like the NASDAQ. Keep an eye on the VIX. The usual things I've been talking about in the past episodes. They will give you a very early indication if things have gone the way that the market has wanted or is expected. So that is it for this week on Damien's Midweek Markets. As ever, you can contact me via email. Damien@moneytothemasses.com is the email address. Don't forget to subscribe to our YouTube channel, and you also can find us on Instagram, Facebook as well. Don't forget to join our Facebook group, which you can find facebook.com/groups/money to the masses.